Hey traders, welcome to another Performante video. We're going to be going over a bunch of different assets. We're going to be going over the S&P, gold, silver, going to be looking at the NASDAQ, Russell 2000, and we're actually going to be first looking at correlations before we get into the price action and the charts. And the reason is we want to understand why we value Bitcoin as a positively correlated asset with other risk-on assets such as the S&P 500. And it's not just because we think it's going to go in a similar direction because of, I don't know, some random thing that doesn't involve actual statistics, but we actually value numbers and data and formulas in order to actually come up with correlations and what we perceive to be risk on or risk off. So this is a correlation chart between Bitcoin and the S&P 500. We are looking currently at the 360-day correlation. So we look at the past 360 days and see how correlated it is. We can see this is the zero mark right there, which is indicating a zero correlation, which is no correlation. Doesn't mean that it's going to go up or down just because one asset's going to be going up or down in short. So we were at is basically zero correlation where we started swinging back and forth. But since around this year, we've been on a massive move to the upside and positive correlation between Bitcoin and the S&P. And the S&P is a risk-on asset in my personal opinion, as well as many others. So we're going to be looking at these two assets going in a similar direction until the correlations change. And we can see on a different time frame that it's still going up. The 90-day has a little bit of hesitancy right now with a key level, but we'll get into that when we look at that chart. So that's the 360-day. We're basically at an all-time high. We can see this dates back all the way to 2011, 2012 there. So overall, we do see that we are at an all-time high for correlation between Bitcoin and the S&P. 180-day chart, we do see a slight move to the downside here in the positive correlation, but still holding a higher low compared to that previous low. And we just broke a extremely significant level, around that 0.15 or 15% in correlation. We've retested there. We made a strong impulsive push, and now we're pulling back with some hesitancy before our next impulsive push, potentially breaking the 0.3 for 180 days. That's very correlated. And then on the 360 day, we're sitting at now over 0.2, so 20% correlation. And then on the 90 day, we're struggling to break around 30% or 0.3 in positive correlation, which is pretty positively correlated. It goes up to a full 1 or 100%. So if we are going to break that 30% zone, we're going to probably make it to 40s or even potentially the 50s, which is very positively correlated. We have to look at these assets together because they are going to be moving in a similar direction. We could have sympathy plays. One could be a front runner where it goes and makes a significant move before the other, and this creates opportunities within the market that we could potentially play off of and make money on. So that's why we look at correlations. Now we're going to be looking at some charts. First look is the S&P 500. We see this was at previous high back in February. We had a potential head and shoulders that did not play out. Let's zoom in here. And what we are potentially expecting is maybe not this aggressive of a sell-off, but we know that there are lots of volatile moves that occur during elections, especially this one. It's going to be a volatile one, I think. So I'd be a little bit hesitant, but overall, I do think that the markets will remain strong. To be completely honest, it's been extremely resilient for all of 2020. Look at really where we've dug out of back in March and April. We've basically broken an all-time high, and we are now reaching a potential all-time high and surpassing it if we do break the head of the head and shoulders. So pretty crazy times, and that's why I'm still looking at this potentially moving to the upside. And this is the overall momentum that I would like to see. There could be some volatility within the election, but overall, we're hopefully going to settle and we're going to get this nice, slow, trending move to the upside where other risk-on assets are going to be really flying like BTC. I think gold and silver, as long as the US dollar is going to the downside, will see appreciation as well. Silver more so than gold. We'll talk about that within the gold and silver ratio. So that's going to be my overall analysis on the S&P if we just take this away. Even a potential move to the downside to the right and left shoulder at around 3390, 3400, somewhere around there, I'd still deem that to be a pullback, validating a major level of significance for a new level of support. If it dips down below it, that would be a little bit worrying, because if it does make that one last spike and move to the downside, could be a double top, which is obviously we would have to shift our bias if it was going to be a potential move to the downside. So let's get the brush here. If it does move like a little bit higher up and then it starts trending to the downside, and then if we start to break around 3200, that's going to be the zone of the double top. That would definitely worry me for things like BTC because of the positive correlation. We could make money shorting, but overall, I think that's going to be the point where I would have to change my bias, is around $3,200. If we are able to hold that $3,400, $3,390, and then continue to move to the upside, holding that as a nice level of support, that would be the ideal option, and that would be, in my opinion, the first situation that we would potentially have, or a higher probability situation, in my opinion. But there is definitely going to be some volatility due to the elections. All right, so now we're going to look at the volatility of the S&P, and then we're going to move on to the NASDAQ, and then small caps, looking at the Russell 2000. So we're in a tight little range here. Obviously, you're not really going to be trading this, or at least I'm not really going to be trading this, but what we're looking for is a nice break of around $25 back down to around $20, which is a previous level of resistance, as we can see right here. And it was also a gap up right there. And we have somewhat fulfilled it, but not all the way. A nice move to the downside would probably bring the price down to 20, or maybe even in the 19s, which would be great, because what we're looking for is these nice slow descents in the volatility where you're getting a nice climb of the S&P. That, in my opinion, is the ideal situation for risk on assets to absolutely fly. So we're looking to see a nice little breakdown of the 25 zone, and then a slight, let's get the bars pattern, just something like this, where we're getting a nice fall. Might get a retest of this previous $25 support as a new level of resistance, but overall, that's ideally what we're looking for the next little bit here, looking at the daily chart. Now looking at the NASDAQs, or NASDAQ, I guess, is a singular. So in my opinion, this is definitely going to be the high momentum mover if we do get the first option, where risk on assets are really going to be flying, because overall the NASDAQ has been showing extreme relative strength in relation to other ETFs, indexes, and if you're looking for momentum, this definitely has a lot of that. So this was that previous high in February. Look at how high we are in relation to the S&P, one of the benchmarks for just overall investors to kind of reach and surpass. You can see that it's way surpassed the February high. So in relation to the S&P, this is relatively strong. And we do see a reversal pattern on the daily. So if we jump to a 6-hour, we're able to see it a little bit more clear. Now, it's not ideal because the right shoulder did not come far as down as the left shoulder. Little bit higher up, but we do see a clear reverse head and shoulders here, where this 11.5-ish zone is a major breakout zone. We saw it very, very aggressively shoot to the upside. Now we're seeing a slight consolidation, which is completely normal. And if we're looking at the geometry of the head and shoulders for a potential target, let's get our arrow, head to the neckline, and then copy that there. And that's basically going to reach you right at the top of the previous all-time high, around 12.5, 12.464, somewhere around there. So I do expect a potential move after this consolidation. We do see a lot of hesitancy on the way up within this range right around here. Previous resistance turned into new level of support, broke that without any issue, and now we're holding it as a nice new level of support. So NASDAQ definitely looks pretty bullish in my personal opinion. And also with the Russell 2000, it's a little bit different. It was an expanding volatility. It's an expanding pattern, and it's expanding in volatility, which I don't absolutely love to trade. I'd rather see contractions in volatility. We could draw a smaller squeeze that occurred right here, which is very valid because we see 3 validations of a resistance zone. So then you can then classify this as a descending channel formation. So let's get our projections. We got our first rejection, second rejection, third, and then we even validated it for a new level of support right there in confluence with the horizontal level that we saw from the previous price action right around there. So that definitely was a descending zone right here, descending zone right here, and you're getting your break, retest, and an impulsive push to break to the upside. We also see 1, 2, and then this was our third validation for that descending trend line as well. So this was the expanding zone I was talking about. So we got a very strong push to the upside. And then if you're looking for potential targets, you'd look for here. So I think the next potential target, I think, would be these highs right here, sitting around 16.99. I think that'd be a really good option. You do see a lot of potential support at this 1610, around there, 1610. Key level of resistance. We were really failing to break above that, and we were holding that as a strong level of support back in the previous price action in January and late 2019. So that's going to be that next level of support that would be a good opportunity to look at, or if you're already in, to see potentially hold before your next impulsive push where you're going to be making that money. So that's going to be the overall analysis on I'm looking at RTY, which is basically the futures of the index, RUT, which is the Russell 2000. So that's going to be a couple indexes, as well as, well, I guess 3 indexes and a little bit of a tool that I like to use for looking at the volatility. Now we're going to be jumping on to the metals, gold, silver. Not a whole lot to talk about what we're looking for. And also we see the dollar in the bottom left-hand corner, which is going to be very useful to talk about even looking at other assets. So what we see right now is still the squeeze occurring, but what's nice is you're seeing a very well-respected previous blow-off top right here, and then you're getting the consolidation where you're getting 1, 2, 3, 4 validations of a key level of resistance. So we can use this as a very strong level and well-respected zone for a level of resistance. And we can see right here, first rejection by the bulls to keep the price above a certain level. Second, and we also see a higher low, and we also see a potential higher low right here. We could potentially draw an ascending zone, which is creating a symmetrical triangle. So then if we do see a squeeze here very soon, we're looking for that previous high to turn into a new level of support in confluence with this well-respected descending zone to give us a nice impulsive push, corrective push, and then once you see the break of the high of the previous impulsive push, that would be a good opportunity to enter. You could also look at a smaller time frame for this contraction and volatility. It sometimes is wedges or triangles, and that does prove to be a pretty good opportunity if you are looking for that better entry on a smaller time frame. All right, so that's going to be gold. We are still patient on that one, so we're not really looking for any opportunities because it's still contracting in the volatility. Same with silver. So let's look at the small price action here. Very similar story to gold. We see our anchor point, second rejection, third rejection, and then we didn't really quite make it to the last one. I think we could see a little bit of a higher push and then a little bit of a slight rejection, and then we can create our ascending zone like so, and then that could potentially create an ascending triangle formation from a descending triangle, which can occur from time to time. So then you're looking for not only this trend line to break, but you're also looking for this horizontal zone to break if it does come, because you see that was a major level of resistance. And then on a larger time frame, that would be a candle closure right there, and then you see this entire $26 range hold right there, and then you see a massive slam to the downside, a squeezing up to that previous level of support where sellers are trying to keep it down, and then once you see that initial break, you're looking for a nice pullback where you're looking for possible entries like we talked about last time before you look to enter. So that's going to be the overall analysis on silver. Very similar. We're just waiting for a little bit more contraction within the price action, and then that nice expansionary impulse push to break out of that significant zone of resistance to start the momentum back up, and then we can enter before the next rally comes in. So that's the overall goal for silver. We'll look at how it goes. Obviously, we have to look at just how far it moved from, so it makes sense that there's going to be some correction, some pullback that's going to give some market breadth in order for the bulls to get hyped up, amped up, get interested in the price because it's lower, get interested because it's consolidating, holding levels of support. It's not like a crazy phase where there's dumb money going in. Now it's smart money coming in after the massive expansionary impulse push to break out of these major levels. The key level that we really broke out of was $20. Key level of support turned to resistance, as well as the $22 range, which is now holding as a nice level of support. We do see this $26 range as a major level as well, and that would be nice to see as a level of confluence. You can see the smaller time frame. We already talked about this level of support. So you can see just how valid just looking at the recent price action is with previous zones of sensitivity. So that's going to be silver. We're now going to get in, actually let's talk about the US dollar because we can't forget that. Not really going to be discussing the gold and silver ratio. We discussed it enough for people to understand what it's all about. Now we're going to be going, and let's just make this a little bit cleaner. There we go. So this is the US dollar DXY. We see this major level of support right here, which was also a significant zone. If we're looking all the way back, key level of resistance turned to support. Support kind of right here. Not absolutely perfect. If we go on a larger time frame, we would be able to see it a little bit better, but this is a very significant level of sensitivity for both buyers and sellers, but right now it's going to be sellers because we just broke through that zone and now we're retesting it to see if the sellers are going to validate it as a new level of resistance. If it is, we're going to get another spill, probably make a lower low from this low, which means that risk on assets like the S&P and Bitcoin are going to be really moving to the upside. So the big question is, how does this look? And we'll look at the smaller time frames to understand in more detail what the US dollar could be looking for or looking at in the next couple weeks. So on the daily chart, we had this major level of resistance right here that was failing to break, or the price was failing to break above, but we were making some lower lows, and then we made some higher lows, which was a potential base. Now this zone right here, this 93 zone, is very significant because this is the breakout zone of our base. We saw gold do this. If we zoom gold back, let's say since 2008 to present day, we saw a massive move to the downside. The $1,400 zone was the $93 zone for gold compared to the DXY. And once you saw it break, you're expecting it to continue upwards. That is the overall momentum of the market because you saw a very nice, well-respected bottom occur. Now, we saw a nice, well-respected bottom occur for the DXY, the US dollar. Strong impulsive push. Yeah, there's going to be some hesitancy and some resistance there, but overall, you are expecting this zone to hold as a support, and it really did not. It fell to the downside, made a lower low from this low, which was already a little bit low, but we got to give it a little bit of room to breathe. But on the daily large time frame, you saw this candle close. We had a full trading day below this major level of significance, and now we're retesting it to validate this previous low and this resistance, this resistance, this resistance, all these zones as yet again another level of resistance. So overall, yes, we could get back into the trading range, but I think this is really showing me that the sellers are still really taking charge. Even if we broke a major level right here, does not mean that buyers are going to step in for the US dollar. There's still weakness for the US dollar, which means that there's going to be strength for things like also gold and silver, because we already talked about BTC and the SPX looking bullish. So that's what I take from the DXY. Now we're going to go on to BTC. And what do we see on Bitcoin? We see a break of this descending wedge. So if we go initially to, let's say, a 2-day chart to really look at the large time frames here, we can see, let's just make this volume a little bit less. And let's skip the brush. We see this major descending trend line and ascending trend line right here, creating a nice symmetrical triangle. This is the breakout, so we're now pulling back into the 10K range, which was a major level of significance for BTC. We saw it since around September of 2019, deemed to be a very difficult zone to break. and we did break it, and now we're pulling back to validate this zone as a new level of support, in my opinion, before the next impulsive push to the upside. So let's now look at the potential move that we are going to be trading here, because obviously this does look very, very juicy in my personal opinion. So let's now break it down into a smaller time frame. We're now going into the 12-hour. So we see this zone as a strong level of support. It's not a perfect one price, but it's around, let's say, the 10K zone. We see a low first get created, very strong base, impulsive push. We made a higher low, and then we started squeezing because we saw this descending trend line create a squeeze. So then what we did is connect the anchor point and the major lower high there, and then we saw two more validations of this lower high creating a descending zone, and then we saw an ascending zone right here, and that was our small symmetrical triangle that is potentially going to be the continuation. And then we saw this previous high, which was the major level of significance, that get validated for a new level of support, and we saw buy pressure or injections of buy pressure right soon after we saw validations that this is a key level of support. So in my opinion, Bitcoin is looking very bullish. In short, looking at a smaller time frame, we can even go to the 4-hour. We saw a very strong impulsive push. BTC is just consolidating, really not doing a whole lot in terms of overall squeezes right now. Just looking at it right from here. But what we're looking for is to see this key zone hold as a support right around there. And we saw let's just get this. We saw a high get created. That's the first high to break out of the 11.2K zone. We saw a small consolidation, a bull flag, and then you saw a small dip to the downside, a fake out, and then a huge rally from the buyers. So this is a potential fake out for the shorts because it made a lower low, but then it spiked up, making a significant higher high, breaking the previous high. So right now we're holding that previous level of resistance as a new level of support. So we're holding market structure in bullish form, and I think that overall we are going to continue towards the upside to this range here. And then let's just talk about potential targets for very, very near term, because we've already talked about targets in a previous video. But let's look at this zone here, this major triangle. This is the breakout zone right there, and horizontal right to around 13.36, let's say. And then let's go to the daily chart, and we can see really that's going to be the next potential target for BTC once it surpasses this high there. Doesn't mean that you should take all your chips off the table, definitely not. We do see this major triangle right here, and this is going to be the large time frame kind of position trading target that we're looking for, because it did break that major triangle right there, and it's going to be around 30. Let's get right there, and we can see it's around $30,000 to $31,000 is the potential next target, in my opinion, for BTC on a larger time frame. But on a smaller time frame, it's going to be around 13.3, 13.4. So let's now break it down on a 2-hour, although we really can't discuss much more in terms of potential opportunity and just like talking about it, because really I am pretty bullish on this. It's a little bit ugly in terms of where the price is right now. What I kind of would like to see, ideally, is we do see this exhaustive high. If we're really looking at a small time frame, we could potentially see something like this. So let's actually break it down into a smaller time frame and see if we're able to see a potential squeeze within the market structure. I don't really like going below 1-hour time frames, but let's see if this is going to do it. It's like giving me a little bit of let's just talk about Ethereum while that's loading. So what I like to see for Ethereum, it's a little bit of a lagger in my opinion compared to where BTC is, but I think 388 is going to be that major high that I like to see break. We see all right here, key level of resistance, and we haven't really been able to surpass it. We did break this series of lower highs where we saw lower, well, not really a lower high here because that was a higher high. So this was the high, lower high, lower high, lower high, and then we broke the lower high market structure, and now we're getting a nice new impulsive corrective push that is in a bullish market structure. But this is that major level of significance that I'd like to see, which is around 388. So once it breaks above 388, we're looking for that impulsive and then corrective pullback, and you could put a stop entry above that zone so you can enter above that zone, or you could look for consolidations with a type A or type B candle closure in order to validate that low as well. So those are some options that you could use for possible entries on Ethereum in the future, but right now I'm still looking for that 388 zone to hold. Okay, so now we're going to look at the 1 hour chart here. I think we even need to go a little bit smaller of a time frame. And let's get our volume. So what I was looking for is something like this, and that can be green. It's not absolutely perfect. I'd like to see maybe one more. And then you can also potentially get, depending on where the low is, 3 points of contact, because you have our first point of contact right there, you have our second point of contact right there, and then if you're able to have a third point of contact right there, also with this low here, which would be kind of the last resort if you are going to get that. But what you're potentially looking for is something that's going to look something like this. So let's get our bars pattern. Ideally, in a perfect world, that is something like that, how it would look. So you're going to get the nice consolidation at that zone of confluence. You're going to get a series of failures to break above a certain level and then below a certain level, creating a nice tight zone and a squeeze in volatility. And you're going to get that first impulsive push that's going to bring you over a major level of significance. And once it validates for a new level of support, you could look for potential opportunities to look to carry the momentum to the upside. So that's going to be the overall analysis on BTC, looking at from a large time frame all the way down to the 1 hour chart. We already talked about Ethereum, so that's going to be the end of the video. Hopefully you enjoyed it. If you have any questions, definitely don't hesitate to drop them in the comments section below. If you thought this was educational, informative, entertaining, useful in any way, it'd be great if you give it a thumbs up and subscribe so we know that we should continue making more videos like this. Hopefully everyone had a good weekend. Until next time, have a good one, traders.